Welcome to the new European ETF market trends for May 2016. In May, flows were limited at 1.7 billion, which is the second lowest month since January 2016, below the year-to-date average of 2.2 billion, and of course below the 6 billion record average of 2015. Globally, flows were negative on equity at 1.4 billion. These outflows mainly concern European equities at 1.5 billion, although at a slower pace compared to 4 billion in April 2016. Outflows were mainly concentrated toward European equity at 1.5 billion, also at a slower pace compared to 4 billion in April 2016. Year-to-date, outflows amount to 7.8 billion, with investors having high uncertainties concerning the result of the UK and Spanish elections. Outflows also continue to concern Asian equity, namely Japan, at 772 million after 782 million in April, as economic news flows is increasingly negative in Japan. On the opposite, flows are positive on US equity at 606 million euro after the record of 1.8 billion in April. The mild recovery in the US is still sustained by the accommodative policy from the Fed. Flows on emerging equity ETF continue to be sustained at 416 million after the record high of April at 1.7 billion. Globally, inflows on emerging market year-to-date amount to 2.3 billion. Investors are mainly concentrated on broad equity indexation, with 612 million euro on MSCI emerging market indexation, while indexation on country ETF, single country ETF, is seeing some outflows at 251 million euro, indicating the cautiousness of investors in investing in this area. The positive trend continues on smart beta ETF at 708 million euro. Mainly defensive strategies are in favor of investors, minimum volatility in a context of high uncertainties, and also factor allocation strategies are starting to see some interest from investors. On fixed income, the trend continued to be positive at 2.5 billion, although at a slower pace, mainly concerning corporate bond and emerging debt. When looking at European govies, outflows have halted with only minus 70 million in April after the record of 1.4 billion euro in April. Flows here seems to be moving with the pendulum of the UK referendum. Investment-grade corporate bond segments continue to be sustained by the ECB intervention scheduled in May, with 1.6 billion of new inflows. On high-yield bond, this month outflows of 262 million as investors have some cautious on risky assets. In line with the positive trend on equity emerging debt is also seeing some strong inflows, with 304 million euros of inflows in May and a total of 2 billion year-to-date. Investors are mainly favoring local debt ETF. That seems to reflect that investors are ready to take currency risk, betting on a Fed softer stance for longer. Finally, on fixed income, inflation-linked ETF continue to see sustained inflows at 283 million, mainly on US inflation-linked products. Interestingly, in May, commodity ETF are seeing record inflows at 569 million euro in an increasing commodity price environment. Thank you for listening, and I will be pleased to meet you for the next European ETF market trends next month.